Let's take a look at what the Fed mentioned yesterday. Let's look at the overall market, Bitcoin, and then at the end, let's get into some of the Bitcoin miners to see how they're doing today. So yesterday, the Fed announced that they're going to reduce the balance sheet runoff in terms of how many securities they're selling each month. Up until now, they've been doing, or at least claiming to do, about 90 billion a month, and they're going to slow that down. That is actually supportive of the market, meaning that there is going to be less selling pressure on securities going forward from the Fed. I'm also going to show you one thing here that I like to do whenever a Fed chair talks. I like to take their speech, plug it into ChatGPT, ask a couple of questions about that, and see what it gives me. And in this case, I think it was pretty clear what it gave me, and that the sentiment of it is exactly what most of the news outlets have been putting out. So every time I've done it, it has kind of fallen in line with the news outlets. I don't know if that means the news outlets are doing the same thing or not, but it's generally how it's been shaking out. You can see here at the last part here, this was the important part. Gradual approach to balance sheet reduction. The Fed plans to slow down the pace of decline in securities holdings to ensure a smooth transition and avoid stressing money markets. Basically, that's a soft landing. I also ask for like a summary of tone, right? Like, what is his tone, hawkish or dovish? And this is what it came up with. Overall, Powell's tone seems cautious and balanced. He acknowledges the progress made in the economy, but remains vigilant about inflation and the uncertainties ahead. His statements suggest a dovish stance, prioritizing caution and flexibility in monetary policy decisions. There aren't clear indications of future rate cuts, but the emphasis on data dependency and the need for greater confidence in reaching the inflation target imply that any changes will be gradual and dependent on economic conditions. Basically, the same thing he's always saying, but with a dovish feeling to it. And the market did like that, as you can see during, not yet, but I'll show you. You'll see that the market did actually like what you had to say. Now, let's take a look at tapering. Let's do this real fast. This is the balance sheet of the Federal Reserve. This little jump here, this huge jump here is what happened for COVID. A jump like this has happened once before, at least in the recorded history of this balance sheet, and we'll take a look at that here afterwards. So as you can see, it went up and it continued going up all the way until May of 2022, where we reached a peak. We came down. You can see this bump here. That is this bump here is the bank failures in March 2023, and we've been coming down, 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 down since. Okay. We are nearly back to, if this thing would work, that would be fantastic. All right. Let me just, there. Okay. This thing here, currently they're at $7.4 trillion. The peak back here, right after COVID, was $7.168 trillion. I'm thinking the Fed is going to get to about that rate and then start to curl back up again. Now, why do I think that? I think that because if we come back here to 2007, 2008, oh, hey, look, that looks quite familiar, doesn't it? All right, big jump. Let's go put it to where that's not there anymore. Okay. What happened on this balance sheet? Okay, so this was the peak of that Fed injection during the Great Recession, and it increased the balance sheet to $2.25 trillion. Then it came off really fast, which probably is what caused our massive recession at that time, but let's not talk about that. And then somewhere around 2010, mid 2010, it peaked at 2.3 trillion, came down a little bit. Let's see, back to 2.29, which was pretty close to the 2.25 of the initial pump, right? What happened from there? Guess what time period that was? That was Q4 2010. You know what happened after Q4 2010 and for the next 10 years after Q4 2010? Well, just the largest economic boom in American history that took us right up to this point here where the Fed got scared and did the same thing again. So I'm thinking the Fed balance sheet will likely taper off and continue to taper off until we get to real close to that 7.1 trillion. So I'm thinking they've maybe got another $200 to $300 billion left of tapering on their balance sheet before they kick it back into high gear and start sending us flying high to the moon. That's my assessment of what the Fed is likely to do based on what the Fed has done in the past and the fact that they don't really have a lot of room to reduce their balance sheet because guess what? The government's broke. So they have to inflate their balance sheet again pretty soon after deflating it in order to keep this whole train chugging. So let's take a look at the overall market real quick. So right now, this is the SPY. A couple of things I do not mind on this. but also don't love. So currently, I like this candle from yesterday, actually, that Fed meeting candle. Now, it is an FOMC meeting candle, so it might not mean anything, but it is an inverted hammer. Came out to be an inverted hammer at potentially the bottom of the move. So if this candle stays above the body of this, stays above $501.35, I would say this is actually a bullish signal right here, potentially. And then this morning, we're actually opening up positive on the SPY. It is coming down. It is looking like, actually, as we record here, it's getting very close to wanting to touch that body, which would not necessarily negate my thoughts immediately, but if we do get a closure below yesterday's, which would be below the 500 level on the S&P 500, the SPY, I would be looking for it to come back and retest these lows down here about 494-ish. And the lowest I could see this going. Now, this is where it gets a little scary for people. The lowest I can see this coming down to is if we have to go on the weekly chart for that. And if we go to the weekly chart, the lowest I see this coming down is potentially coming down to the 50-week, which is down here at the 460s. If we were to get all the way down there, it likely would crawl up to like the 470s, maybe even the low 480s before price collided with it, because it is such a lagging SMA. But the 50 SMA, the orange one down here, is likely where we would go if we broke beneath this. And it does look a little ominous when we look on the weekly. You can see we've got a bit of a flat top forming here and a bit of an ascending line forming here. And you know what I like to say about ascending lines, they like to break in a descending manner, whereas descending lines, in my opinion, often like to break to an ascending manner. So that's a little bit scary. I'm actually going to leave that on there right now. I'm not super concerned about it. It does have to break first. Like, it has to get beneath this 20-week moving average before I'm actually concerned about it. But it is a possibility. And if we come down there, that's likely where we're going to go, which honestly would be quite the opportunity. Of course, this is not financial advice and not a suggestion to buy, sell, or hold any asset whatsoever. But I do think if we came down to the 50 SMA, that I would likely be buying quite a lot of assets down there. So I'm going to be saving up money for that potential outcome here coming forward. Okay, that's it for the overall market. That's all I wanted to talk about. Oh, wait, no, it's not. But I'll say, if we get above, let me turn off my drawings. If we get above this candle right here, above this candle, above 508.45, if we get above and close above that in the next days or weeks, I am looking at price trying to run for the all-time high at 524. I'm looking at it for trying to go 525-ish if it gets above that in the next few days and weeks. So that's also something to keep in mind. So there's bullish sentiment, there's bearish sentiment. We're sort of sitting in an area of limbo. I think we're going to see a time period of greater volatility right now as we go through the Q1 earnings. So keep that in mind. Let's take a look at Bitcoin. Bitcoin is up 0.2% today. We came all the way down to 56.5, and then we came up, and then today's candle went as low as my line at 57,000, kissed it, came right back up. If we start to charge up from here, I wouldn't be super surprised. So notice though that this was a descending trend that broke to the downside, which is something I like to attribute to Tesla and Nvidia charts more than anything else. And it's not super concerning, because honestly, usually when that happens, when you see that big massive break to the downside, soon after you see a rally. I'm gonna take you to the Tesla chart right now to show you exactly what I mean. So here's the Tesla chart, and it took me all of like 20 seconds to find this earlier when I was looking for it. So we see this channel right here, right? This channel right here. Boop. Stayed real tight for 1, 2, 3, 4 days, and then broke aggressively to the downside, followed by a green candle, then a hammer candle, and a big old gap up. And once we got that gap up, we did a little curl over, and then we just ran for it. And from the bottom of that move, which was October 31st, until December 28th, so 2 months later, 60 days later, which is also very similar to yesterday's video when we talked about the bottom of the last ETF announcement followed by the rally. It was a similar amount of time. It was like 60 or 90 days. Anyway, 60 days later, it was up 36% after that scary break to the downside. I've noticed that in the Tesla chart a lot. It likes to follow a channel, break that channel really frighteningly in like one candle down, and then immediately start rallying. It likes to do that. So I'm going to be looking out for that type of price action on Bitcoin. I'm not saying that's going to happen. It could still flash down to that 55,000 level, maybe even to that 52,000 level. That is absolutely on the cards. But we are currently on support. We are currently on the bottom of this descending channel here, where we have bounced one, two times before. Will this be the third, or will this be the beginnings of this head and shoulders that takes us to $52,000? I can't say for certain yet. I do think that we're in a position of indecision at this time, but this sell-off here isn't super scary, and I do think that by the end of Q2, these prices will be a thing of the past in terms of being concerned about it being underneath $60,000. That's my personal belief on this one going forward. And that's all I've got to say about Bitcoin today. Let's take a look at the miners. So let's see, CleanSpark is up 0.7%. It's kind of just hanging out here. I think this is probably going to end up looking like a little bit like a bear flag and come down to that $15 mark again, maybe even flash down somewhere around $14. That's what I'm seeing for CleanSpark. Now, if we break out of this descending channel that we're in, which is very aggressive, mind you, this is a very aggressive channel. Aggressive channels tend to be followed by aggressive channels in the opposing direction. If you notice back here, there's an aggressive channel up starting on April 16th, followed by a very aggressive channel coming down. If we look back here, March 20th, big aggressive channel up, followed by a very big aggressive channel down. So once we get a scoop, like back here, we get a scoop. We're looking like we're taking a scoop of ice cream here. Let's get a scoop. And then May and June will probably be our scoop. And then we're like, woo, we come up and make this high look like a molehill. That's what I'm looking for on CleanSpark with this. But of course, we could flash down to the 14s. In the meantime, I do think 15 is in the cards. I think potentially even a little bit below 15 is also a possibility here. Let's take a look at Mara. Mara is up 0.8% today. It's not the best thing I've ever seen. I really was hoping this inverted hammer here would give us something nice today. Maybe Mara could have come out with some news or something, helped us out, but I don't think that's what happened. We're hanging out right on my box here, just right on the top of this box at $16.20. And really, we got to get up and above $17.20. We got to get above that. That would be engulfing this candle back here from April 30th, this big sell-off candle there. We need to get up and above that price to see any movement to the upside on this. Let's take a look at the SMAs real quick. Where are they? And where are we? We're right on the 200-day SMA. Yeah. Look at where the 20 is. The 20 is right at $17.20. Which goes right in with what I just said. It needs to get up and above $17.20. Otherwise, we are going to sit coiling in this space. And the longer we coil here, the more aggressive the move is going to be. And the longer it takes, the Bitcoin price starts to inflate, it's going to be quite the massive jump to the upside at some point. Again, not financial advice, not a suggestion to buy, sell, or hold any asset whatsoever. With Mara, I have been buying calls for the end of 2024 on here with the intention of selling those calls sometime during the summer rally. So I have been doing that, full disclosure. Let's take a look at Riot. How's Riot doing today? Up 2%, 2.55%. Riot's actually been a standout ever since April 18th in terms of its price action. I do like yesterday's candle on it. Again, kind of like an inverted hammer down here. If we get a move up here in the next couple of days, up and above $10.65, I would be looking for a run to the 50 SMA, which is up here at $11.60. Currently, we are sitting right on support on the 20-day SMA at $10. And I do think that if we get up and above 1060, 1065, 1066, that we would have a pretty good chance of making a run for that 1162, where we would run into light resistance all the way up to about $12. And then hopefully I would see us come and test the 200-day SMA again up at about 1250 on Riot. So that's what we're looking at. Downside potential on Riot, honestly, support if we break the 20-day moving average, support will be found at about, $9 to $8.50. Between $9 and $8.50 is where we would find support if we were to fall further. Let's take a look at BitDigital. BitDigital is up 1.24% today. We are currently still hanging out on that megaphone. We are trapped beneath the 20 and the 5-day moving averages. Right now, they are right on top of each other. It's not the greatest place to be. We need to get up and above that, which means we need to get up and above $2.12 to have a shot at coming up to $2.34, $2.35, 34 cents, where the 50-day SMA is waiting to hit us back down. Hopefully we slice right through it and come right up to the 200-day, which would take us up to $2.69. That would be fantastic. On the downside, we do have support on the megaphone line, which is this descending trend line, this green one, which currently is hanging out just under $2. And if that doesn't hold us, the next level of support that we would see would be around $1.85 on this stock on BitDigital. Anything below that, we're probably going down to 150 if I'm being completely honest. So I am expecting, just like with all the miners, I'm kind of expecting a lot of sideways action for the next 4 to 6 weeks, followed by some pretty big upward movements out of these things. That's what I am expecting. Doesn't mean it's what's going to happen because I can't tell the future, but that's what I expect and what I am planning for. Bit Digital is zeroed, hasn't moved at all today. It's a zero-sum game of this day. But don't dislike the look of this. Don't dislike this. If this turns green today, I might actually be pretty happy about this. But we do have some room to move up to the upside. Remember, this candle right here on May 1st looks very much like this candle on April 16th, which would mean that we would make a higher low, which would then normally, if we're lucky, be followed by a higher high, which would be above $2.14 and could potentially happen anytime in the next 2 weeks. So I'll be looking for that. If price gets up and above the 200-day moving average here at a $1.90, I would be looking for it making a higher high above that $2.14 range on Bit Farms. Will their earnings help us on May 13th? Let's hope that's the case, because if it does, that would be amazing. That'd be quite fantastic. Let's take a look at IREN. I haven't looked at IREN in a while. It is up 1.85%. It's making the exact same chart as Bit Farms. Look at this thing. It's like it just took a page from Bit Farms' chart here. It came down aggressively, up aggressively, down aggressively, stopped, making the exact same kind of candle on May 1st that it did on April 16th. This could be doing the exact same move as Bit Farms, looking um, just as bullish almost, except this high is an equal low. So that's not as good. So there's less of a chance of us making a higher high in the short term, since we made an equal low with a pretty much identical candle. So we might come up to like maybe $5.24 on IREN before seeing some resistance out of it. And if we come lower, we would come all the way to $14.17, potentially all the way down, or $4.17, potentially all the way down to $3.83 on IREN. Let's take a look at the Cipher warrants. Cipher warrants did very good to me yesterday. That was really good. Yesterday was amazing. Right there in the morning, happened while I was recording. It came all the way down to 75 cents for a short period of time. Let's go on to the 30-minute chart real quick and take a look at that. Yeah, we weren't even down there for like 10 minutes. Came all the way down to 75 cents, and then immediately afterwards it was up at 87 cents. I had an order that triggered at 96 cents, and then I bought another bag at 83 cents. And I rode that all the way back up to $1.04. I am looking to take that all the way up to at least, let me get back to the daily. I'm looking to take that at least, I don't know why I have this line here. Go away. I'm looking to take this back up to at least $1.44, perhaps like $1.50, maybe even $1.60. That's what I'm looking to take this up from. So my average is 90 cents right now on this. I have a little over 1,000 at 90 cents right now on these, and I'm looking to take this back to about $1.60 before I dump that bag again. I've done this a couple of times. I'll keep doing it as long as it keeps giving me a price under $1 for Cipher warrants, and that's pretty amazing. With that said, I'd like to just say that right now I think we're in the most difficult time right after the halving. We've been waiting for this big momentous event to happen for such a long time, and it happened, and things are kind of flat, which is making people lose confidence. It's making people wonder if they were wrong. It's all part of the game. Bitcoin always does a bit of a floundering after the halving. It's normal. I think this is the most difficult time to be holding on to the asset. It's going to be volatile. It's going to do things we don't expect. It could potentially drop dramatically before rallying dramatically. It's time to buckle your seatbelt and get ready for a rough ride. And hopefully you've anticipated this and that you are prepared for this ahead of time, because it is going to be difficult. It is likely going to be the most difficult time holding Bitcoin now until it starts to pump again. So with that said, please like, comment, and subscribe, and have a profitable day.